Good morning, everyone. I'm Catherine Ross with TheStreet. I'm here on the floor of the NYSE with Jim Cramer. Jim, how are the markets looking?
Well, I've got to tell you that there's a lot of conundrums in the market. And then, for instance, oil's clearly collapsing, which is very bullish. But it means that the consumer has more money to spend, which is something that a lot of people feel Jay Powell's targeting as being inflationary. Because remember, too much money chasing too few goods equals inflation. So it's almost like everything that happens that's good is being viewed as bad for the rate hike picture, meaning there'll be more rate hikes. I've been urging one and wait, not one and done. Because if there's inflation, I want inflation stamped out. I want one and wait. We've now got this new consensus developing of none. None's a mistake. We have to be sure that we do not have too aggressive growth in the sense that some parts of the consumer, because we don't want inflation. Inflation erodes our long-term earnings power. But I also feel like that the more we raise, the less we're going to lend, the less we're going to lend, the less we're going to grow, less we're going to grow, the more we're going to have layoffs. And I'm not in favor of layoffs. I don't want to have a lot of layoffs in order to be able to stop 3% wage growth. So I'm giving you the parameters. It's oil, it's the Fed that are really on the hot griddle. China, again, making some very negative comments. I just think that we should all be ready for very big hikes for tariffs, which is another reason why the Fed has to be careful. That's the one in wait. The decline in oil is just incredible. And I talked about it a lot in our conference call yesterday about how these stocks are now trading, many of them through where they traded when oil was at $26 a barrel and their balance sheets weren't as good. What does that say? The stocks are saying that oil's going to 20. I don't think that's possible. I think we're pumping out a huge amount of oil. Thank you to Rusty Brazil for talking about how we are really exporting a lot of natural gas, but natural gas has collapsed in price. So we've got raw costs going down, margins going higher. This is the Clorox thesis, but business sentiment down because of worries. Illinois Toolworks get a second sell today. I use that as a metaphor. Emerson. Tariffs going up. Very confused time. Obvious bear market. Against that, we got -7 on the oscillator, -7.2. If you don't buy at -7.2, anytime other than 2008, 2007, at the end of the year in 2008, you've made a mistake. And as long as and also in 87 crash, you have to go that far to find instances where you don't buy it right here, down 7, which is why we are buying. We have sold a lot of stock, and we're putting money to work here. Why? Because we should get an oversold bounce, and there are plenty of companies that are still doing well. And if we get one and wait, I think we could have a run.
I just want to theorize with you for a second. What if the Fed chose not to rate hikes?
Geez, then I think we'd all be worried that there's something that we didn't know, that maybe there is a problem in the system, that there's too much stress. Because what that would mean is that on October 3rd, he's talking about overshooting. And then in the middle of December, he's talking about not raising. That would be a sign that he was dumb as a bag of hammers, like Marley, my dog that ate the whole coffee. They'll eat anything. Just remember, they'll eat anything. I would hate to think that Jay Powell, on the one hand, at the beginning of October, talked about boom time. But you know what? It's interesting. We got a comment I'm digging it up, from Brian Cornell. Target saying it's the greatest ever, and Target hit a low yesterday. So, there's a lot of mixed information, but we don't want Powell to be that wrong. That would be terrible. I'm going to give him that the economy was strong. It's not strong anymore, as robust as it was, and that's because the economy is made up of what I think is going to be a not great Christmas season, and not great buying, particularly in the high end. I don't know any high-end company that's doing well, except for Restoration Harbor, RH now. Sobering, Catherine, sobering.
I agree. You just said that we have a not great Christmas season. Now, I'm wondering, when we're talking about that, are we talking markets?
No,
just in general?
The buying. Boy, it's better than London. Oh my God, are they getting some bad numbers there? But I'm just not getting a good read on a lot of companies doing well for Christmas. I think it tailed off, and I think Amazon's doing well. I have Walmart on tonight for Jet, but I don't see, I just think that when you had Tiffany not be so good, and Ralph Lauren not be so good, and VF okay, and You have PVH okay and Macy's okay. That's a lot of okay.
Let's tie that into your real money column from this morning, because you said,
Oracle?
you said Oracle did okay,
Oracle
but
lowered
it's still
expectations
not doing
so much, and the last quarter was so not great that this time they did it. They were very combative on the call. They had some big wins for human capital, which is against Workday. They did Larry slagged Amazon. Go report back to a November 5th Andy Jassy, whom I love, Amazon Web Service tweet, which basically said, "Oh, you give me a break." They're almost entirely off Oracle. Very combative call. Stock's inexpensive. You had your catalyst. That's kind of how I look at it. Maybe a little multiple revision there. We took it as a sign that maybe some of the selling in tech might be off. So we bought some Cisco, and we'll talk about that in our conference call, in our program for action alerts. But I do think that it's mixed, and we're oversold, so you got to do some buying. When we're -7, you're going to make a mistake if you don't do some buying. You don't sell here. You do not sell here.
And I just want to make
you
a
can
quick
hold or you can buy, but you cannot sell, Catherine.
And I just want to make a quick note that Oracle is real money stock of the day.
Yes.
So that we will have
SOD.
wall-to-wall coverage, SOD. Jim, how did your conference call go yesterday?
I thought it was fat. Well, look, it was very, very mea culpa oriented. I always like to measure things. It was 3-to-1 negative about myself to positive, and a lot was about the oils and Goldman. I do feel that my belief in energy was very misplaced. I did not see. I was looking at energy, looking at world demand, and Iran. And thinking that this would be, and the Saudis cutting back, that you would get a second half move in oil that would be up. That was very wrong. I had to beat myself up about that and some of the other stocks. I urge people to go. The calls can be humbling. And, I made some mistakes, and I talked more about my mistakes than I talked about what I did right.
And TheStreet will have some of your clips from it, but if you want the full experience, you can find it on actionalertsplus.com.
Guys, it's a 70-minute call. Surely there's something in there that you're going to learn from. Just watch the end if you don't know. Watch the end. There we go.
One final question for you, Jim, and that is, for older investors, is gold a safe haven? Travis is wondering.
I always think you have 10%. I have 10% of my retirement in gold related. It's not been good, but it's insurance policy. I mean, it's like my Allstate policy hasn't been good, but it's my insurance policy. It's like, my life insurance is, hey, thank heavens, right?
Yeah.
Thank
Okay.
heavens. Don't want it to pay off.
All right, Jim, thanks for all of your insight. It's always a pleasure to talk to you. I'm Catherine Ross of TheStreet. We'll see you guys tomorrow.